Okay, so that's the one that's currently been changed, and the second one is created pretty much last week. The 5 simple steps where, because as much as we can, we want to be objective now in terms of the way how we analyze it, all the way. So in terms of the economic calendar, Forex Factory, creating into, and then we go to the next one. So I'm going to use this later on the live trading class, looking at a dollar index. So I embedded a chart there and then, and defaulted on a daily chart rather than going to the 4-hour, 1 hour. And then going through looking at the futures index. The futures index is our end of day data. That's all pretty much all we need, right? Based on the S&P, and we create a new higher high, and going through to start scoping the market. So this is also a good one where now if you can't, you can't open up your trading platform, at least you have access to it right now, and everything is pretty much in live in all multiple time frames from the monthly all the way down to the 1 minute, and then you can change anything. So the beauty about this is you can also have stocks, forex, and futures, so everything all the way from the index, right? So but obviously we're focused on the currency markets, and hence basically through there you can add, and so for the next step, looking for the evidence. Once you've found pretty much everything, all you got to do is just to execute risk and money management, added a profit calculator, so you'll be able to spit out and calculate pretty much the profitability. If you're going long, going short, opening trade price, closing trade price, profit maximizing strategies, hence now with the fibs to make it more objective. And now you can use in terms of, if we're going through looking at, say for example, now with this one, if we're analyzing 1, 2, 3, 142, 72, 142, 08, 141, 44. At least in this manner, once you create, say 142, all right, let's go through, sorry, the high, 144.78. Then the low was 139.37.3, 139. Oh, sorry, 139.373, 139.373, and the direction is in an uptrend. Okay, I'll just take that, do the calculation, bingo. So we have profit targets pretty much through there, 42, 42.07, 141, and if it breaks through the 100% all the way 139.37, at least you can go all the way 137.30, 158, 155, and vice versa. So part of the extensions, so everything's been laid out, everything pretty much for you guys. And then next step, step number 5, that's it pretty much, and it goes back to home. All right, so that's the added bonus for you. Okay, so it's more objective, very easy in all the steps. Okay, any questions, Anthony or Anne? Do you think that would help?
No questions.
Help you guys?
No, I don't have any questions.
Okay, great. Well, there are no questions. I will go through first the pound yen, and then if you have any questions from last week in terms, or any issues or challenges in terms of the trades that you might have, then we can go through that as well. Okay, so Friday, what do we have? Trade recommendations after analyzing from the live trading one was a dollar CAD, Kiwi dollar, pound yen, dollar Swiss. And my favorite was the pound yen with the highest probability to drop is about 100%. Okay. All right. So the question is why? Why is it better than the dollar CAD? Why is it better than the dollar Swiss? Why is it better than the Kiwi dollar? Right, there are a couple of key elements that we need to analyze and need to look for. So one is that even though despite based on the weekly chart, if you can see through here, well obviously it's not this week, but last week, what was the entry? Entry price of 142.92. So 142.92, target was 140.69, actually even went below 140.69. So that's from that point of entry, 142.92. Okay, 142.92. Let me draw freehand. 142.92, 142.92. Change that and put it into red. Right, so okay. So 142.92 was the entry, and if you notice, it was already pretty much a low one and stabilization despite a higher high, higher low in terms of the high and the lows. Doji, odds and probability. Part of that, if you compare everything here, this is a data flow from that opening. This should have been a bullish bar. Okay, so at the moment currently filling the lower shadows and lower shadows right there. Alright, so that's the bonus part in terms of the doji. The second one is the price to beat was this price right there, 145.95. Second price to beat was that high of that, 144.89. So it's pretty close. It didn't want to. If it was really meant to be that strong based on the bulls pushing further, the price, technically speaking, really should be have closed around 145 or even close to that 146. So it should have been another bullish bar, but it didn't want to. So they tested the 145 area, 144. It didn't like it. They wanted to go through 144.89, and then the last minute it closed below everything, pretty much on the level of supply. So that is one added bonus on why the probability of winning to the downside is highly probable. Right, now we're going out to the daily chart. One thing that I like to look at is mainly the highs. So this is the high, that's the high, and that's the high. They didn't want to go beyond this high. Now this high though broke this high. Nice bullish bar. The bulls were in control. Higher highs, higher lows. Technically speaking, if this one was so strong, this bar should have been a new higher high breaking out on this high. Didn't want to. Failure. Now the high didn't want to break that high, but instead, being on a Friday, the bears took over instead and basically saying, no way, I don't want to go and push it. And if you combine everything all together, which form pretty much on the doji. So in other words, this is also a fake out. And if you notice on terms of the trend, higher highs, higher lows, higher highs, higher lows. Technically speaking, higher high should be here. They didn't want to do that. Higher high, higher low, lower high. Now we have a new lower low. So the risk was pretty small. Our stop loss, or the stop loss that I did put in it, was the high of that one at 144.88. So 144.88, 142.90 something, close about 200 pips pretty much from there to there. So the pound in the end is very volatile. In one day it can pretty much go close to about 300 pips. That's pretty much in one day, right? So in terms of the risk is pretty small, like 200 pips, and also the probability being pretty high is actually more than almost a 2-to-1 relationship, but not quite 1.5 to 1, to be honest. Where it's at right now, and it's getting close to 2-to-1 relationship. We've pretty much left it. Okay, so in terms of the tip is we need to look at the highs. If the highs doesn't want to break in an uptrend, then we're going to see current exhaustion. Okay, so now the other question is, what if it's still an uptrend? If it breaks through there, then obviously we'll create a new higher high, right? All right, so how do we know as well that the trend has been broken? Well, that's pretty easy. So we look at from this low perspective. Okay, now we have a clear cut that the trend is no longer in place. So we have a new change of trend in that short term, pretty much from November. Look, it's so very steep, right? So here we talk about the trends. We have a primary. Oops, I don't want to use that. Sorry. And low. Okay, primary. Secondary right there, and then we have our tertiary. So we have this big empty space in order for the price to head back and give it back a little bit. Right, since you guys did the art and science of technical analysis, it's going to be the same angle, pretty much about to drop approximately. About a month from today, if it chooses to, the price will be around here, but obviously it won't go in a straight line. Okay, we'll go lower low, lower high, lower low, lower high, lower low. So Feb. Odds and probability anyway, in my point of view, the ones we're going to see a weakness in the marketplace. The Dow broke the 13,660. Next is definitely 14,180. That's the next one. However, we're going to see a minor correction somewhere before it can go to 14,198 or 180. And when that happens, this is also going to correct to the downside a little bit around here, just to give it a little. But if it doesn't want to, obviously, the market is the king. It can do whatever it wants to do. As far as we're concerned, it can continue to go to the upside. And the reason for it, bigger time frame still dictating very bullish. So there's no sign of weakness. Let's look on the monthly. Alright, monthly is showing different signs, obviously. So we have a here, okay, don't like this one. So this is a gravestone doji, but see that long tail right there, they will fill that up a little bit further. But if they sometime in the long run, but if now the bears are currently in control, these come from higher high, higher low, higher high. So breaking new laws. Now from this perspective, pretty much from what we were analyzing ages ago, that 1,400 currently has been filled, okay? In terms of that, almost, to be honest, okay? 1, 2. So we're just 1, 3. So about 100 to 200 pips. We're off by about 100 to 200 pips. But based on the double bottom formation, neckline, currently target has been reached. Higher highs, higher lows, higher highs, but very, very steep. So stabilization, either a correction before continuation, or stabilization, continuation of low 2 in terms of the momentum to the upside. Price to beat, this next one is 145.96. Here's a much stronger supply, 150. Major supply about 163. So definitely we have higher highs, higher lows, higher highs, higher lows. And you're currently in a new bullish run. 08, 09 were the best. Big volatility to the downside. Hopefully we can also see big volatility to the upside, but to the upside is much more challenging than to the downside, to be honest. Alright, now as part of that, clues are, 1, if the high doesn't want to break the last high, even though despite being a higher high, higher low, next one should be a higher high. This one gave it away, didn't want to, hence the probability was very, very high in terms of dropping to the downside. Okay, questions? Start from you, Anthony.
So wouldn't be, I guess it wouldn't be too late to get in this trade. Intention might be a little different than what you guys did, though.
My own opinion, you're a little bit not too late. One is because now you're reaching a level of demand, right? The low is still higher compared to that. So overall, technically speaking, in terms of the trend is still an option, whether we like it or not. And the weekly is pretty strong. It's dictating that, hey, look at that, higher highs, higher lows. But you never know what will happen by the end of the week. It can come back up in order to fill in within this broken line uptrend right there. And on the monthly is not over yet. We still have another 8 trading business days. The price can come back up over 140.86. It can go another 100 pips, right? So in terms of trading it, too late. Odds and probability to me is actually now with you in terms of going long. Now from here, yes, we have lower lows. Okay, from here, lower low, next one, lower high. Good support base right there at 139.37.3. There's also support around that area. A lot of buyers around this point. And now you're currently in an area of demand at the moment. From that low, also this low. So within the range of that area of demand, the low of this price is currently hit and it's now supporting it. So since it's highly volatile, the odds and probability that if it chooses to retrace, if that is the new low, and then you're going to see that the low doesn't want to surpass this low when this bar finishes, this candle finishes, to go to 141.38, that's more than 150 pips currently at the moment. So on average about 100 pips to go to the upside. As a day trading environment, or even a short-term swing trade like a overnight, and on a 1 hour, you look at the 1 hour, much clearer. Now if this is a stabilization point of view, and say at 11 you're gonna see a bullish bar, perhaps you might even see an empty formation right there. If it breaks 139.96, odds and probability to get to that 141.32 is highly probable. I mean, even if you get to 140.30, 68, these are already 100 pips, right? So if you get it around here, you get 100 pips. Does that make sense, Anthony?
Yeah, that makes sense.
Okay, cool. Oh, Phil's here as well. Any questions, Phil or Anne?
No questions for me. That's all good.
Phil?
Hey guys, sorry, just got in.
No worries.
Obviously we're talking about the pound. Can you go to the
Pound.
daily, please, for a sec? Yep, 4 hour.
So before you came in, we actually was just explaining why based on last Friday's pick out of the dollar CAD, the Kiwi dollar, the pound yen, the dollar Swiss, the pound yen was my favorite in terms of highest stars point of view with a high probability of dropping. And I believe you got the same. Right. So here's the 4 hours. Questions, Phil?
Yeah, and go to the weekly, please. Cool, thanks.
Okay, no questions?
No, weekly's got a, if you want my view is going what I know now. Has more room to drop because the weekly candle is currently quite bearish and you're playing against the bigger swing. So, yeah, happy.
Okay, yes, now the caveat though, since it's an uptrend, higher high, might this be higher low, next one might be higher high. Okay, so that's the caveat.
Yeah, if that candle at the moment, if that finishes like this at the end of the week, it still has high probability to continue to the downside, correct?
Here we go again. So which one is higher hierarchy? Price action based on supply and demand or trend?
Trend.
Okay, so what is the trend at the moment?
Uptrend.
Okay, does the market go in a straight line?
No.
If it doesn't go in a straight line, what does it have to do?
Makes peaks and troughs.
Okay, so what is it trying to do at the moment?
They make a higher swing low.
So is it forming a peak or is it forming a trough?
It needs to form a trough.
Gotcha. So what did it do last week? Did it form a peak or did it form a trough?
On the weekly, it's a peak last week.
Okay, great. So in terms of the peak last week, it has now to create a trough. Insert a higher high, higher low. Here's a good strong supply over here, but currently being under the downside, that is now a floor. There is a floor, there's the floor, here's strong floor. So really good strong floor. And hence, what are the odds that they might rebound to go to the upside?
Here, as you put, well, at the moment, quite weak because the current candles has a lower high and a lower low and it's bearish. Sellers in control.
But you're just focused from here to here though, right? Lower lows, lower highs. I get that. But you need to look at the overall picture. Look how many weeks that it went through to the upside? 2 months. 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks. Now 9, 10. This is the 10th week pretty much from that low. Hasn't even created a higher high nor a higher low. Nothing through there. This is the last higher low. Nothing. Data flow. Nothing. Okay, if say the low will break that low, then we have a new low. That's higher high, then next to higher low. Okay, I agree with you, you know. There might be a probability that it might drop, but it needs to break this long demand low.
Yeah,
As far as we're concerned,
that's the end of the week now, no? As we pointed out last week, that's quite bearish. Why would we be going long
this one,
at the moment?
why would we
Current one.
the current one? Well, obviously it's only Tuesday. It's not
No,
finished
that's
yet.
That's the end of the week.
Mm-hmm.
Okay, and now we're at the end of the week. It has high probability to continue to the downside to make a higher swing low. Correct?
It has a probability, but what if this is now the higher swing low? The higher low, rather than higher swing low, just higher low. Because that's a definition of an uptrend. Higher highs, higher lows. So, yes, such a big drop to the downside. What we want to see is a stabilization point of view, some form of a doji or some sort, in order for the rebound. Yeah, next week it might create a new lower low and it can come back up. We don't know. It can also create all the way to a piercing pattern, and it can create a bullish engulfing pattern. It can create something like this. So here's a perfect scenario. Now we can argue that, hey, probability this one is going to drop is highly probable because now the bears are in control. Yes, it's highly probable, but it's also in a level of demand. Did it drop? No, it didn't want to. It created a bullish bar which pierced through the body from the previous bar, right, and continued to go pretty much to the upside. We can argue same as this one. Very bearish. Why didn't it drop? We can argue this too. Why didn't it drop? It went up. This one. Probability that really technically speaking it should drop further is highly probable, then why didn't it drop? Right? Now, why didn't this one go up? Next thing you know, it dropped. Reason is in a downtrend. We are no longer in a downtrend. We're in an uptrend. So that's the thing that we don't know. We don't know what next week is going to bring, but in terms of looking at demand and supply, we are currently at a level of demand in an uptrend. As far as I'm concerned, that could go back up and continue its trend next week, and it can drop again. They might retest the price and the supply, and it can drop again. So here's the beauty about trading. This is the feature that we don't know what's going to happen. Yeah, we have this whole big segment right here that it has to fill in. But there's also this segment around here that it has to fill in. So, in that sense, can create different possibilities. One possibility, bullish bar, piercing pattern, bullish engulfing. One possibility. Other possibility, a doji. Then can create a morning star, reversal to continue. Okay, so then from here, if you try to retest that price, you can create double top. From the double top, break on the neckline and it can drop. Or it can go through there and then continue to drop this way. Or it can the other one is it can just continue to drop all the way down here. So there are definitely a lot of possibilities that we can figure out. But when that happens next week, I would rather go long than go short with a low risk high probability, and the reason is because it's in an uptrend. Okay. if I see based on the daily by Friday, and we're going to see some form of doji, or so like this one we don't know yet, but definitely it's just currently hitting that low. It's on its critical state, 139.37.3. There's only just 30 pips to the downside. So at about 11 to 12 we're going to have a look into that, where that price is going to be. But 1, 2, 3, the bears are currently in control, pretty strong from here. The probability that this will break is also pretty high, to be honest. Okay, now let's go through 4 hours. 4 hours, there's nothing like in terms of the momentum stopping. Okay, let's look at the 1 hour. So not even a doji. Okay, so but here we have 3, 1, 2, 3 that it's currently supporting a price. That's pretty thick, right? But if it breaks through and closes that 139.373, then yeah, then you to conclude your one based on the weekly, then they will push the price further and break through here. Then I'm gonna be with you. So it all depends now in terms of the what's happening on the daily as well, because the weekly is not over yet. We don't know where the week is gonna go. It can come back all the way up there as far as we're concerned. If it comes back through here, then by the end of the week that will go further. But if it finishes like this, then yeah, we're definitely gonna be shorting that. And the level of demand, waiting for a correction before a continuation. So in other words, we're going to do a mechanical order 141.50, 142, better price, because it can create a high before it can create a low. I hope that answered your question as well, Phil.
This guy's back on what we discussed last week, so now I'm confused again. That's fine. I'll sit here and listen.
Alright, not a problem. Okay, so we have another 15, 20 minutes. So what issues, challenges that you guys had last week? Anthony?
You're asking me what challenges I had?
Yes.
Just I didn't have any real challenges. Just kind of last week was pretty good overall. So I've been having a so far pretty good year. But yeah, I don't feel like I've ran into anything so far. Maybe there's a couple. Just last week, I felt like there were a couple. I mean, a lot of pairs. I just didn't really see a lot of opportunity as much as I wanted to. But I think this week looks a lot more promising.
Okay.
So that's about it.
So what's the difference between this month compared to the previous months?
The main difference for me is I'm risking a lot more. Like I'm actually putting some money into my trades, so I have to be a little bit more thoughtful about things. And I'm a lot more confident about my analysis.
Okay, great, good. Then how can we keep that then and maintain consistency for the next 11 months?
Yeah, so I'm looking at the forum, and that looks pretty promising to me. You know, I still have. I mean, technically, I'm just about halfway done with the program. So I mean, another 3 months. I mean, it should be. It's going to be an interesting 3 months for me.
Okay, great, nice. And
Last week, yeah, it was a big week last week because of the pound dollar loss. That affected me a little bit, but what I did is that I actually did not trade, just left my trade that was there reflected on the loss, accepted the loss because it wasn't a big loss. Had winning trades anyway as well, which was great. However, I didn't take action, like because of that loss. It affected me a little bit. Therefore, when I saw trades, I was hesitant a little bit, and then so I just decided, okay, because I'm hesitant and not in the proper frame of mind, then I better not trade at all, or just keep on the sidelines and just monitor the trades that I'm in. So that's the big challenge last week, and this week I'm ready to go.
Okay, so what plan did you put in for this week?
This week I'm just monitoring, I'm looking at the pound dollar again because it's at a very good level of demand. So that's what I'm looking at. It retraced quite considerably, dropped considerably. So looking at that, and if there's an opportunity there, then I might go along with it. But at the moment, still sellers are in control, so I'm not touching it at the moment. But I've got some trades in there, indexes, and a couple of pairs, so I'm just monitoring that at the moment.
All right, cool. Okay, we'll make it well worthwhile for VJ and Tony. So VJ, what were your challenges last week if you were trading?
Ray, last week I wanted to stay out of the market because I didn't spend enough time analyzing the market and so I'm just getting my trading plan ready. So at step one, basically.
Okay, great, beautiful. Thank you for sharing. Tony, how about yourself? What challenges did you have last week?
I'm surprised that the market is still going up.
It's the market, right? The market will do whatever it wants to do. So what challenges did you have then?
Well, I'm looking for a short somewhere. But I don't know. I looked at the index and I don't know. I haven't traded much lately, but I noticed that I think the expectation is gold is supposed to go down eventually here. And there's a lot of volatility in gold as the market goes up. So if I were to short, I would short gold in the near future.
I see. All right, perfect. Okay, so in other words, both of you were just waiting for the time. Yeah, timing is everything, just waiting for it. Yeah, good. All right, Phil, what other challenges are you currently having, mate?
Look, I like where I'm at, but there's just a little goal that I want to get over. I've got a little stumbling block. It'll get there.
Okay.
And it's method 1 and MTFA. That's it.
Okay. All right.
I've done all right, but I still don't clearly understand it.
Okay. Not a
when
problem.
I think I've just get it, it's like, nope, that's not the way you do it. Okay, and start back again.
Nice. Perfect. Okay, good. Yeah, you stumbling block. Yeah, you fall, you come back in again. Alrighty, nice. Well, thank you for guys for sharing. Okay, the other one that I want to go through is going to look at the Kiwi dollar based on M3. Alrighty. Sorry. So yesterday, that's also an entry to go short. So if you wanted actually, Anthony, if you were looking at the trades by the end of the afternoon, that would have been for you. So currently, it would be in about another 100 pips to the downside. All right, Kiwi dollar. Why didn't I like it compared to in terms of shorting the markets? Now M3, of course, M1, M2, M3, they're all totally different to each other. M3, the reason I didn't like it to short in terms using the methodology is because of a part of the being level demand, and I wanted to feel in the price a little bit here too. So if the price will finish like this above the 8 or the 10, then pretty much that's the closing, that's the exit strategy for it. But we don't know what it's going to do. As far as we're concerned, the price can come back down below the 8 and the 10 tomorrow. So there's another 20 pips below tomorrow if it chooses to. Okay, with M1 on the other hand, totally different ball game. Okay, now in terms of the highs doesn't want to supersede previous highs. So last week didn't want to supersede this high. This high didn't want to supersede that high. So this is still the highest. So based on M1, I'm still very bearish. Currently a much better price of shorting, to be honest, in my own personal opinion. Risk is pretty small, and it's currently struggling 1, 2, 3, 4 weeks in a row. It's the 5th week, and good supply level. Now talking about timing, yeah, the timing is very important. So if the price will cross over just a little bit higher, then it will be great. But on the daily though, see how we have pretty bullish, we have higher highs. So it will dictate pretty shortly. If this by tomorrow we're gonna see a bearish bar, or the next couple of days doesn't want to go through on these highs, then this is within my radar. I'll be shorting this guy with a low risk, high probability of winning to the downside. I believe the market is about to pretty soon, we're going to wait for just a couple more reportings perhaps, and we're going to see a minor correction to the downside. The market is still pretty strong, and as like I said in our previous, pretty much in forecast analysis, never be fooled by the monthly or the weekly. The bulls are still way in control. Okay, so likewise from this one little point of view, if the price can come all the way to 84.46, 30 pips, then highly probable that this is gonna tank to the downside. Alrighty, obviously now we have also the monthly. So we see where the month is just currently filling the blanks from that higher high. In order to continue the trend, this high has to be broken. It needs to be broken, and also, obviously, in a bigger time frame perspective, if the price will finish like this, then our short position to short to the downside will just be very short. The reason is because the monthly is also pretty strong. Because as from here, might have higher high, higher low, higher high to create and break that high. Out of everybody, like the Kiwi, the Aussie, they're not as strong compared to other pairs or even with the index, because the index currently broke through different levels at the moment, right? So since 2009, 10, 11, 12, 13, and 8, so 5 years ago. So those are the things that we need to be aware. If we go through the monthly from 2009 here, 2011, technically speaking, this one, the price should be here by now, but doesn't want to. So they're just holding the prices around these levels, and as far as we're concerned, it can come back all the way down to with a bigger time frame. Questions? Hence, that's why I didn't like shorting the Kiwi based on M3. No questions? Going once, twice?
None from me.
Okay, cool. Well, there are no questions. We have a couple minutes. We'll wrap it up. We'll have a quick break. Then I'll see you guys in the next class. So Phil, I know you came a little bit later. Just basically mentioning to everybody in the room that future reference, if you have your trades that you want to share, please whack it into the forum. And it's easier that way for everybody so they can also see what's happening and it can give feedback. Anybody can really give feedback, and I can also see whether they're doing and giving the feedback correctly or not. All right. Then if not, we'll see you guys in the next class. Thanks for coming and visiting BJ and Tony, and you're more than happy as well to come into the live class if you want to. Right, if not, then no other questions. We'll leave it as it is, and I'll see you in a couple minutes.
Okay, see you in a few minutes.
See you.
Bye.